If you are filing ITR-1 this year, the income tax portal won't just accept whatever you type. It runs over 300 hidden validation checks, and if you break the important ones, your return gets blocked instantly. In the next 5 minutes, I will walk you through the rules that actually matter. So your filing goes through clean the first time. Let's get into it. First, the rule everything else depends on your tax regime. The moment you pick a new regime, almost every popular deduction has to be zero. No deductions. ATC, ATD, HRA, home loan interest on a self-occupied property house, all of it. If you claim them under the new regime, the portal throws a hard error and won't let you to upload. The old regime allows these deductions but with strict limits. So, step 1, decide your regime, then claim accordingly. Now the limits. Everyone gets wrong. Under the old regime, your combined deduction under ATC, ATCCC and ATCCD1 can't cross 1,50,000 rupees. That's the hard ceiling. On top of that, the extra NPS deduction under section 80CCD subsection 1B is capped at 50,000. Separate from the 1.5 lakh, and the standard deduction for salaried employees, it's 50,000 under the old regime but 75,000 under the new regime. People constantly quote the wrong number. Make sure you don't. Here's one that catches a lot of people. Your total chapter 6A deductions can never be more than your gross total income. You can't use deductions to create a loss. Your final taxable income is gross total income minus deductions or zero. Never a negative number. The portal checks this and stops you cold. Section 80D, health insurance. Under the old regime, you can claim up to 25,000 for yourself and family. If a senior citizen is covered, that goes up to 50,000. There is a separate limit for parents on top of that. And within these, preventive health checkups are capped at 5,000. One more thing, if you claim 80D, you must fill in the details in Schedule 80D. If you leave the schedule blank, the return gets rejected. This one's about your age. Section 80 TTA gives up to 10,000 on savings account interest, but senior citizens can't claim it. Instead, if you are 60 or above, you use section 80 TTB, which gives you up to 50,000. Claim the wrong one for your age and the portal flags an error. So remember, under 60 use TTA, 60 and above use 80 TTB, and that too in old regime only. Now my favorite, the rebate trap. Under the old regime, the famous 12,500 rebate under 87 only applies your total income is up to 5 lakhs of rupees. But here is the catch. If you have long-term capital gains under section 112A, say from selling shares or equity mutual funds, and that pushes your income over 5 lakhs, the rebate is denied completely. Under the new regime, the cutoff is much higher, around 12 lakhs of rupees. So if you are an investor, watch this closely. And speaking of capital gains, your long-term capital gains under section 112A gets an exemption up to 1,25,000 rupees. Only the amount above that is taxable, right? If you have a home loan, two key rules are there. For a self-employed or self-occupied property under the old regime, interest on your loan is capped at 2 lakhs of rupees. Under the new regime, you can't claim it at all on a self-occupied house. And for a rented out property, your standard deduction is fixed at 30% of the net annual value, right? Not your actual expenses, 30% flat. Finally, the basics that quietly reject returns. To even use ITR-1, your income excluding capital gains must be under 50 lakhs. Your name must match the PAN database exactly, and your Aadhaar must be linked to the PAN, and don't manually override any calculated totals. The portal checks every sum against the schedules. If the max doesn't tie out, it won't upload. Get these things right and your filing sails through. If this helped, hit the subscribe and good luck with your return.